Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a morning Forex technical report. We're going to take a look at the technicals driving the Forex market. Today's date is November 22nd, 2022. We'll start off by taking a look at the euro versus US dollar. We saw the euro move down sharply yesterday. Really started on Friday. Friday's trade to the downside, moving away from the 100-hour moving average right here. The 200-hour moving average was broken during trading yesterday, and the market was able to stay below that 200-hour moving average right through here after the break, and that gave the sellers the go-ahead to push lower. We did not get down to the 50% retracement target that was of the move up from the low price in November 10th. Most recent move to the upside here for this currency pair to the high here. So we were able to get below the 200-hour moving average, and also, by the way, the 38.2% retracement, but not able to reach the target on the downside. And trading today, we've seen a rotation to the upside here, but the market came into this swing area here between the 102.73 and 102.915, let's call it 92. This area was defined by some swing levels through here and here and here and here and here and here, so on and so forth. We fell below it yesterday. That was also near the 238.2% retracement. So lots of activity going on at that level. So we need to get above that 1.02918 level, and then back above the 200-hour moving average and the 100-hour moving average, just as if the SPY is going to turn more to the upside. Absent that, and the sellers still hold the shorter term bias, defining level bias, I guess, in the euro versus US dollar. Take a look at the daily chart. What is significant here, and given the sellers' added confidence, is the inability to get above and stay above the 200-day moving average. That's the green line in this chart. We tried to go above it one day yesterday, last week, 2 days last week, and then on Thursday and Friday, the price stable 200-day moving average forced the price to the downside. We did break back below this 38.2% retracement of the range from the 2022 high back in January to the low that we saw here in September. The 38.2% retracement is another key level on the top side, coming in at 1.0284. And as you can see, the high price in trading here today was right around that 1.0284 level. Level also corresponds with swing levels through here. So if I were to say something about today's trading range off the daily chart, is we held resistance here. So the sellers, again, remain a little bit more control in the euro versus US dollar. And we'll see how that plays out here in the rest of trading here today. But be aware of that. Let's take a look at the dollar versus yen next. And if we look at that currency pair, we're going to stay on the hourly chart here. In trading yesterday, the market moved above the dual moving average levels, including the 100-day moving average and the 200-hour moving average. That gave the go-ahead to push to the upside. We came up to the 50% of the last trend leg to the downside from the I guess this is the November 9th high down to the low that we saw last week on the 14th. So the 50% retracement level found some sellers near that level, and the price rotated to the downside. Where did we go? We went right back to the 100-day moving average and found support buyers against that level. So ping-pong in between the 50% retracement and the 100-day moving average. Also, the 38.2% retracement of the same move to the downside is at that 100-day moving average. So dual levels down there, 50% retracement on the top side. Buyers are leaning against that level. Which way do you like the dollar? If you like it to the upside here, this is the level where you want to buy against with the stop below that level. If you don't like the dollar, you want to see the price move below the 100-day moving average and start to look toward the converged 100 and 200-hour moving averages near the 140.82 level. On the downside, that would be another key level to get to and through if the sellers are to take more control in the dollar versus yen. But right now, the 100-day moving average is holding support, so the buyers are trying to keep support in that currency pair. Let's take a look at the sterling versus US dollar. Next, on the daily chart, we see that the low prices over the last few days have been able to hold support in this swing area. Let's get on the arrow here, much easier. swing levels through here and here, and then we turn to resistance through here and resistance here, and we find support again here. So last 4 days we've seen this price find support against that level, and trading here today we've above that level, and we started to move above the top side of that swing area near the 1.1840 on the top side. In trading last week, the price stalled ahead the 50% retracement. This is of the 2022 trading range from the high all the way to the low that we saw in September near the 103.52 level. So the 50% held resistance, that's going to be a key level on the top side if the market is to continue its move to the upside. Let's take a look at the hourly chart next. And on the hourly chart, this is where we're going to get our short-term bias clues here from the market price action. What we notice here is that the market is in a fairly defined up and down trading range with, I would say, in this trading range, maybe even more recently here with the 38.2% retracement of the move up from this low right here on the November 9th to the high that we saw here. The 38.2% retracement held nicely last week, and in trading here yesterday, the price found support buyers against that level as well, and also the rising 200-hour moving average. So what we haven't seen is a break below the 200-hour moving average, although the 100-hour moving average has seen a lot of breaks up to the downside and then back to the upside here. So these are breaks that we've seen in this pair. But the 200-hour moving average is holding support. So what does that say? Well, we're going to watch the 100-hour moving average here. Every time the price has sort of moved above it, we've seen, or below it, we've seen some momentum in the direction of the break over the last few days. And so we're kind of hoping, or traders are probably hoping, that the 1.1063 level will hold support now. And we're currently trading at 1.1863. We're currently trading 1.1874, so we are bouncing off of that 100-hour moving average. If we stay above that level, we look toward this level up here. If we break below that level, watch the 200-hour moving average. Again, haven't been below it since this day back here on November the 10th. So be aware of that. But right now, the buyers are more in control in the sterling versus US dollar. Let's take a look at the dollar versus Swiss. This is interesting because we have the converged 100 and 200-hour moving averages near the 0.9521 level. They're just a few pips away from each other now, as the 100 just crossed over the 200. But as you can see, the price is trying to get below that level, tilt the bias more to the downside here after the break above the 200-hour moving average gave the buyers the go-ahead to push toward the 50% retracement of the last move to the downside, but weren't able to get to that level and then tried to hold the 38.2% retracement in trading here today. That's this level right through here, and the market couldn't do that, so we turned from in the short term, I guess, from buyers to sellers as we held resistance here and pushed down through the 100 and 200-hour moving average. So the sellers are making a play here to the downside. As long as the price can stay below that level, we can go down to this swing area and then look for further downside momentum down toward the 0.9478 area for that currency pair. That'll about do it here for the morning report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.